Hello everyone and welcome to TradeGuide, and today we are going to learn how to use the future life feature. So we'll cover this feature today. So we go to the left hand side corner and the fifth option here is future life, and when you click on the future life, this interpretation screen appears in front of you. So uh, there are several columns on the screen, and here is time, expiry, interpretation, trend, last traded price, change in last traded price, open interest, change in open interest percentage, trading volume, and change in trading volume. So, and we have two options here, that one is interpretation and the other one is graph. So here you have the graph and here you have the interpretation. So we are going to understand that what does this mean and how do we use this. Okay, so we are taking example of Nifty. You can take an example of Nifty or Bank Nifty, any one of them. Currently we have two of them. That later the stocks will be added up to this one. And so how do we use this? So let us understand first that what these columns represent and what these numbers mean. Okay, so the first column is time. So when it comes to the time, this at the very bottom is 9:20, and this at the very top is 3:30. So the opening time of the market till the closing time is being divided into 5 minutes interval each. So there are several 5 minutes interval formed, and the activity of the market, the overall activity of the market is being broken down into 5 minutes interval, and an observation is made that what is the activity that has taken place in every 5 minutes. The second column now that we have is the expiry. So the expiry here means that the contract which we are taking, the which contract are we taking, the expiry of it is mentioned over here. So you can know that which contract are we talking about, which contract are we referring to. After that we have the interpretation column. So here is the interpretation column, and you can see four type of interpretation over here: long built up, long unwinding, short built up, short unwinding. So what does this mean? So a long built up is when there has been an increase in the open interest and increase in the premium. When there is an increase in the open interest and the increase in the premium, that means new long positions have been executed in the market. The buyers are buying new long positions. New long positions are created in the market, and thus this represents a bullish trend. Okay, so this is a long built up. After that, we come up to long unwinding. So when we come up to long unwinding means that suppose if I have bought a option or a share. So creation of long, I have created a long position. Now in order to take profits, in order to take my gains, I have to square off my position. Now when I square off my position, I do selling. Okay, so to square off my buying position, I have to do selling at a higher price, and this selling results in a bearish trend. So that is long unwinding. Okay, so at the time of long unwinding, the open interest decreases and the premium also decreases. So that is long unwinding, and that has a bearish trend, and it is represented in the red color over here. You can see long unwinding in red color and long built up in green color. So now we move on to the short build-up. So short build-up is generally when we are having a bearish view of the market and we have created a short positions. We are betting on the downward movement of the market and we are creating a short position. We are selling, short selling we are. So at that time, we initiate a bearish position and therefore we are creating a bearish trend in the market. By we, I mean that the participants in the market, the major participants in the market are creating a bearish flow in the market, and therefore short built up is shown in the red color and it is categorized as bearish. Short built up occurs Whenever short build-up occurs whenever there is an increase in open interest and decrease in the premium. Now after that, short unwinding occurs. So short unwinding occurs when there is a decrease in open interest and increase in premium. So here you can see short unwinding. Yep, yeah, here it is. Short unwinding. And now what is short unwinding? To understand this, suppose I have done short selling on a particular stock X. At the time I have done the short selling, the price was 100 and now the price is 80. In order to make profits, I need to buy back the stock at 80 and sell it at 100. So uh, for doing this, I have to buy the stock, and by I mean the participants who were bearish with me have to buy the stock. And when this amount of buying takes place in the market, then there is seen a upward trend in the market, like a bullish flow in the market. Okay, so this is basically to square up the position, and for this the buying is done, and the buying results in upward movement, and that is short unwinding. So short unwinding is categorized as bullish. Okay, after that you have the trend formation. So by using long unwinding, short unwinding, long built up and short built up, you can easily find out what type of trend are the participants in the market creating, and you can categorize it in the trend column. Either it can be bearish or it can be bullish. The next column is the last traded price. So this is the last traded price for Nifty. Okay. So like if I see here, like 920 to 925, what was the price at which Nifty closed? At 925 is 10,690. At 930, Nifty closed at 10,696. At 935, Nifty closed at 10,709, and 940, Nifty closed at 10,706. So this basically represents the closing price at every interval of 5 minutes. It shows the change that has taken place in every 5 minutes, because the closing price at here, let's take an example here, at 3:05 p.m. the closing price is equal to the opening price over here, which is also at the same time 3.5 to 3.10. So the opening price at 3.5 is 10,739 and the closing price at 3.10 is 10,759. So you can interpret the change that has taken place in the last 5 minutes. Okay. So change in premium again is categorized in this column to make things simple. If you take an example from here, and if you subtract this by this, you will get the change in premium 10,739.5, 10,759.8, and if you add 20.75 to this value, you will get this value. So this basically represents the change that has taken place in 5 minutes interval. Okay, now we move on to the next column. This is open interest. So this on the base represents the open interest at the start of the day, and this at the very end represents the open interest at the end of the day at 3:30 p.m. What was the open interest? And here we have change in OI. Change in OI is for 5 minutes, like in the 5 minutes interval from 3:25 to 3:30. What is the change in OI that has taken place in the market? So this can be positive or negative. Because the open interest can either decrease or increase. So like here we can see that the change in OI has been minus 3750, and here it has been plus 26,025. So this may vary, and now we move on to the next column. This is OI change percentage. Now OI change percentage is from the basic the total change in OI today that has taken place and the percentage of that change. the percentage of that change that has taken place today in 5 minutes, what was the percentage of the change with respect to the whole day is here. It was 0.28%. So now we move on to the OI change percentage, and to find this OI change percentage, let's look from the bottom. So at bottom you can see the open interest when the market opened, the change in open interest at that time, and percentage change in OI. So with respect to this value, the change that has taken place the whole day is termed for the period of 5 minutes is termed over here. Like for the first 5 minutes there has been an increase by this number, and the increase in open interest by percentage terms is 0.028%, and this 0.028% is measured upon this number. It's measured with respect to this number, keeping this as a base. In the next 5 minutes, the increase that has taken place is 1,875 contracts, which is 0.74% positive. Again, it is measured with respect to the starting number, and like this, the whole change of every 5 minutes interval is being measured over here with open interest percentage change, and this is measured on the cumulative basis, so you can see it easily. After that, we have the traded volume. So in every 5 minutes interval, what was the trading volume that occurred is measured over here, and what was the increase in 5 minutes interval is also here. So when you have this data 13,892, and there is an increase in the next 5 minutes by 2,756 contracts, and you add both of them, you get 16,648, which means that the initial trading volume was this, then there were this many trading volume in the next 5 minutes, and towards the close of the next 5 minutes the trading volume was this, and so on. It keeps on adding, and you get the figure that the whole traded volume for that particular day and the last 5 minutes change in trading volume. So here we have the interpretation chart as a whole, and now we move on to the graph. So the graph highlights the OI percentage change that is taking place and the premium change that is taking place in market. So as we discussed earlier, the OI percentage change and the premium change in market is useful when we want to calculate that either there has been a short built up or a long built up or a short unwinding or a long unwinding that has been occurring in the market, and the interpretation that we can derive from it. So we can easily see this here in a chart format, and these intervals are of 5 minutes each. It is from 11:45 to 11:40 to 11:45, 11:45 to 11:50. So you can see that in every 5 minutes in time interval how the premium has changed and how the open interest has changed. Okay, and below that you have a histogram chart. So this histogram charts generally represent the volume. It generally represents the number of contracts, the volume of contracts that had been traded in the first 5 minutes. 925, 7,560. It for at 12 p.m. it is 2,895. Here at 12:15 it is 7,125. So like this you can see that what were the volumes that were traded in every 5 minutes, and you can interpret that at what time in the market maximum of the activity has taken place. Okay, so how do we use this in order to trade? So we go to the interpretation and we start from the initial market hours. So in order to understand that what is this chart trying to say, we need to observe the data. Like if we, for the first 5 minutes, observation is long built up bullish interpretation, and we need to measure. We need to not just interpret that the market for the first 5 minutes has been bullish or bearish. We need to measure the strength as well. So to measure the strength, we have to see the change in open interest. Okay, so when you see the change in open interest, this is 61,725 contracts addition. After that, for the next 5 minutes, it is 1,875 contracts addition, 12,150 contracts addition, and in bearish it is 21,000. After that it is 18,000. Again it is 15,000 on the bearish side. Bullish side it is 3,000. Again on bearish side it is 40,000. Again on bullish side is 30,000. Bearish it is 12,000. So if I go on doing this interpretation, what I can see roughly through just an overall macro calculation, what I can see is that a major increase in OI has been during the bullish interpretation. So by this I conclude that whatever data I have observed, it shows me that Nifty is having a bullish trend right now in the market. There is no recommendation involved in this. Any trading activity is not recommended here. This is just for learning purpose, and I am just taking a overall view. So this is not. I'm not. Haven't calculated this to the very exact. And any of your trading activities, so you should interpret it. So this was how you can interpret the direction of the market, either the bullish or the bearish direction, which you can see upon the calculation of change in open interest, and you can measure the strength of the trend. So this was all about the future life option, and hit the like button if you find this video useful, and if you have any query related to this or any question related to any other topic, you can just click on the support panel, describe your issue, and request a call back. Our executive will will reach back to you, and we will be happy to answer any of your queries. And please subscribe to our channel as we keep on updating new tutorial videos. And till then, happy trading.